Welcome to the CoreLogic RP Data Housing Market Update for March 2016. The first 2 months of the year have seen the housing market regain some of the losses recorded over the final quarter of 2015, with capital city dwelling values rising by 0.5% in February, following a 0.9% rise in January, to take our hedonic index 1.4% higher over the year to date. The latest figures take the rolling quarterly change in capital city dwelling values to an increase of 1.4%, and the annual change is slightly up from the 7.4% last month to 7.6%. The combination of capital gains and the addition of newly built housing has taken our estimate of the total value of Australia's housing stock to $6.5 trillion. Across the individual capital cities, Sydney was the only city where home values were lower over the quarter. They were down by 0.2%. The largest movements in the capital city index over the past 3 months were in Hobart, which was up by 8.5%. Melbourne values were 3.8% higher. Brisbane showed a 2% rise, and Canberra dwelling values were 1.5% higher since December. Overall, the broad trends in the housing market mask a great deal of diversity from city to city and region to region. Perth and Darwin remain the only capital cities to record a fall over the past 12 months. However, the rate of capital gain in Sydney has slowed substantially since July last year. The cumulative effect of tighter lending conditions, more expensive mortgage rates, particularly for investors, and lower yields, as well as natural affordability constraints and high levels of new housing supply, are likely to continue to impact on the Sydney housing market, resulting in a further slowdown over the year ahead. It's also expected that as the year progresses, the rate of home value growth in Melbourne will also slow. However, the slowdown is likely to be more moderate than what we're seeing in Sydney, at least during 2016. Recently released housing market forecasts from CoreLogic together with Moody's Analytics indicate a continued slowdown in these markets over the remainder of the year. Based on these forecasts, which will be updated monthly, Melbourne's housing market is expected to be the best performing capital city for capital gains over 2016, before the pace of capital gains starts to fall away to less than 1.5% over 2017. The markets that are forecast to show an improvement in the rate of capital gains are Brisbane, Canberra and Hobart. Outside of the capital cities, we're continuing to see a healthy rebound in housing market conditions across the lifestyle markets. Following a slump in buyer activity and prices between 2008 and 2014, it seems that demand for lifestyle properties and holiday homes is consistently improving, which is pushing prices higher in these regions. On the other hand, regional markets linked to the mining and the resources sectors continue to record weak conditions. There may be some tentative signs that these markets are reaching a floor in values and activity. However, there's no indication that values will start to rise in these cities over the foreseeable future. As always, thanks for tuning into the Housing Market Update from CoreLogic RP Data. You can find regularly updated commentary and statistics on the housing market at our website, www.corelogic.com.au.